What's going on, YouTube? Today we're going to be going over how to build a solid and money-making portfolio with M1 Finance. For those of you who don't know, M1 Finance is a great app I use with commission-free trading, very consumer-focused and friendly. But before we get into that, I'd like to invite everyone to like, subscribe to the channel, turn on the notification bell whenever I make a new video. All right, let's get into it. So for those of you who've never logged in or seen M1 Finance before, once you create an account and log in, this is the home page. And there's a few things I really love about M1 Finance. The first is the simplicity and ease of use. Very tailored to the mobile side as well. So if you haven't already, look at the mobile app. Very easy to use, very easy to navigate, move money in and out. But in this case, when I'm on the home screen, I go over to research, and I'm actually going to click on this button here called Expert Pies. Now, there are some other places you can click on. There's news, stocks, different funds you can look at. You can look up any any ETF, any stock, any bond, anything you want to look up here. You can go and drill down into. Crypto's a new piece they have. I'll probably do a video on that later this month. And then we've got Expert Pies. So the best way to go about investing, if you've never done this before, is to go about and look at some of the market movers and what some pre-built portfolios have. So in this case, M1 right off the bat gives you curated portfolios based on your risk tolerance and ability to, or in time horizon. Sorry. So in this case, there's 7 different individual portfolios you can choose from, and these are just filled with ETFs. So you're not picking individual stocks. Of course, you can. But what we're going to do today is we're going to build a resilient portfolio that makes you money into 2023. So for me, I'm more of the aggressive type given my age and given my outlook and horizon. So if I click on ultra aggressive here, you're going to see a couple key things. Right up front, you're going to see this is filled with Vanguard index funds. This is a pretty big staple of more the robo or the automated. And real quick, let me just say that M1 is a much more hands-on platform than something like a Betterment or a Wealthfront. So if you're interested in looking at something like a automated trading for you, that's a Betterment or Wealthfront. M1 is more for those that want to be more hands-on. All right, back to this. So I look here, I can see the outlying performance of the fund over the last 5 years. I can drill down to 3 years, 1 year, etc. Pause. Now from here, what I want to do is I want to scroll down and I want to see what's actually in this portfolio. So really, again, like I said, it comes back to all these different ETFs sit in here. And since the biggest one is this Vanguard Developed Markets ETF, let's go ahead and click on that. And here's some things you want to watch out for and be careful of when you look to invest in any kind of curated portfolio or just a general stock or an ETF. So the first one is you want to look at the dividend yield, and this has a great yield. And what do I mean by that? So your yield is the percentage of dividends a company pays relative to its price. So in this case, 3.99% is a great dividend yield. Anything over, I say 1.5 to 1%, that's something I would seriously look at. So great dividend yield. Expense ratio, very low, 0.09. Just as a benchmark, as a key performance indicator. Betterment, Wealthfront, those are around 0.25 as an expense ratio. And with that, you're getting things like tax loss harvesting. You're getting that automatic rebalancing. You're getting an automated approach, where M1 it's more manual. And then the beta is almost 1, which again is great. I'm not going to touch on the borrowing. That's outside of scope of this. If I go down here, I can see most of this is common stock. There's a little bit of cash. There's some equity. But if I look down here, I can see, hey, these are the big holdings in this fund. So, you've got, I want to say this is a couple thousand stocks are in this ETF. So let's go back here to the second one, the S&P 500 index ETF. Now this one holds obviously 500 stocks in it. If I go down, I can see the dividend yield, not quite as good as the last fund, but the expense ratio is a little lower, and it only holds 500 names. The top 10 here are mostly tech. So if you want to be more tech focused, this is where I would look. And for instance, if you want to add just this ETF, you can just add this to your portfolio. You can either create a new portfolio or you can add it to one. So I'm just going to add it to my flagship fund. It's going to take me over to this page. I've done a lot of trading in here previously in the summer. So in this case, if I wanted to add this index, I could do a equalize. I could select both of them and equalize, 50-50. Or let's say I just really want to get into this fund, and I could do a 90-10. And I could save that. And I'm done. Now in this case, I'm going to go back to research. I'm going to go back to the expert pie and the general investing. We were in this ultra aggressive portfolio. I want to finish this one off. You've got a small cap, a mid cap, an emerging market. You even have a real estate fund, and then you've also got a bond, which is only 1%. So if you're really aggressive, this one's going to lean more towards stock, tech sector with very little bond. If I go back here and I go back to general investing, if I go on the other end, ultra conservative, this one's going to have a lot of bond. This one's going to have, here you go, iShares, treasuries, 1 to 3 year treasury bonds. And over the last 5 years, you're not going to get insane, returns, but you're also not going to get insane losses either. I mean, right now, most portfolios are down 20%. This one's down 4%. So, again, you're getting, an okay yield. Expense ratio is a little higher, but you're also not getting slammed when the market heads south like we've seen in the last, since January, probably 2021-ish. Okay, so what if you want something a little more aggressive, or you just want to have stocks and bonds? So let's go first into the stocks and bonds. In this case, kind of the same thing. M1's 90-10, 10-90. What that means is 90% stock, 10% bonds, 10% bonds, 90% stock. Over here, you can actually see real quick what the yield is on the dividend. Pretty much all the. And as you can see, when you move up and down the sector here, you're seeing different portfolio allocations. So in this case, 50-50 would be 50% stock and 50% bonds. That's exactly what you see. You've got a bond ETF and you have a total world ETF, which we've seen earlier in one of the other expert pies. So if I go back here and I look at something like, we'll look at other strategies. Some of these in here I think could be profitable in time. Something like the cannabis pie, if you really feel like cannabis is going to take off, here's 4 different companies. Canopy is one that I've invested in the past. Some of these other ones, this ARK ETF, equal weighted portfolio. There are a couple in here that I personally invest in that are not inside of M1, although I could. This autonomous technology and robotics ETF and this innovation ETF. A lot of these hold stocks like Tesla, which I'm a big believer in. Zoom, not so much, but Twilio, Coinbase. Coinbase has taken a big hit, especially since the beginning of the year. Exact Sciences, but you can mix and mold these in whatever way you want. So again, if I want to say I want to add this to my flagship portfolio, I can. And you'll remember earlier, I put that Vanguard S&P 500 ETF in there. So if I wanted to equalize, it would be a third, a third, a third. And I'll just say continue, and I'll confirm it. Obviously, I don't have any money in there, but if I did, this is what my portfolio would look like. Okay, so what have we learned? So we've learned that there are several different ways to go about building a strong portfolio going into 23, whether that's general investing and picking something that's already been pre-created, whether that's going through and following a hedge fund, or whether that's going through and looking at just stocks and bonds. And again, if you want to go through and say, I just want to invest in this one ETF, you certainly can. You can add it to portfolio. Now, one of the other things that I haven't touched on yet, but I will now, is you can actually go in here and choose individual stocks. So if you want to just create a new portfolio, which let's go ahead and do that now. So let's say I want to invest in Apple. I'll add that to a portfolio. I'll add this to flagship. Let's go through here, and we're actually going to take out these other 3. Let's go and we'll just delete these. We've got Apple. Let's create a new pie. We'll say tech heavy. We'll add pie, and then we will delete Apple. And let's go to tech pie, and then we will add a slice, and we'll say we want Apple, Microsoft, Google, Amazon, Tesla. Let's get Visa, and NVIDIA. That sounds good. Down here we add. Now we can see we have the choice to say we want to go even, we want to equalize across everything, or we can say, you know, oh, I only want to add, let's put these in here and let's equalize those. And then we will go through and we could then add a different slice, or we could simply leave it alone. So you're able to create different portfolios. If you want to, you can say, hey, look, you know, if you really want to, you could say, I want 90 in here. I want to spread this out. I want to equalize this, but then I want 90. And then I want 1, 1, 1, 1, 1, 1, and then 1. So I've got another 3% I need. So let's just say I want to pick this 4. Now I've got an even 100%. So I could weight it that way, where 90% is Tesla, 4% is Apple, and the rest go to these other stocks. So let's go ahead and exit that, confirm. So what have we learned? We've learned that there's a lot of different ways inside of M1 to create a very robust and resilient portfolio. For those that are new, I would strongly suggest sticking with one of these pre-built pies in here up on top. Of course, you can build your own. I just showed you how to do that. But going through these general investing pies, letting it dollar cost average for you by setting up automatic investing. Automatic investing is very simple to do. You just set up a transfer rule, and it goes in. In this case, I had one set up for every other week. You can edit this, but when you bring the money in, it'll actually put it into the different pies that you have. In this case, my invest portfolio, I only have one. It's my flagship fund here. And in this case, as you saw earlier, I only have 3 holdings in it. I don't currently have any money going into it right now, but that could change in the future. So that's all it takes to build a very resilient and durable portfolio going into 23. Let me know your comments. Let me know what you're using today to build your portfolio. Let me know if you've used M1. I'm actually going to link the referral link down in the description, but feel free to leave any comments. Don't forget to like, share, and subscribe. Take care. Bye-bye.